My gut and only my gut, nothing else, no other mystery, magical stuff in terms of technicals or anything else. It's totally right now, today, my gut says that we're going to hang out around 335 all day today. We could be up or down from there, but that's what I think is going to happen. And then we're going to be at 360 or somewhere close to 360 on Friday. I think Elon's going to be fine. I think he'll show up. I think he'll be excited. I think he'll be enthusiastic. And that's what I think is going to happen. So Tesla should be much higher based on the much higher, much higher than it is right now, just based on the Robotaxi news alone. But for now, it looks like the serious players are keeping their powder dry, waiting for something. I'm not sure whether it's the safety driver out. Some think that that's the thing everybody's waiting for. Maybe it's the major expansion of the geofence in Austin, that'll be the thing that triggers. Some people think that's what it is. Somebody thinks that we need to open it up to all comers. We need to have not just folks that have applied for an opportunity. We need to just let everybody that wants an app get the app. Some think that maybe it's the regulatory decisions by California or Arizona or other places, the United States, for instance, Australia, Europe, China. Maybe it's all of the above. Until we get every one of those questions answered, we can't really go back to all-time high. I'm not sure. But what I do think we can say is that all that's going to matter at 2:30 California time today during the call, it's going to come down to guidance. Now, it might be guidance about any of those things that I just listed, but it's definitely going to be robo-taxi rollout guidance, short term, medium term, and long term, that everybody's going to be looking for. The last time we heard, it was going to be this is what my understanding is. So we'll see what the changes are, but I think confirmation alone would be good. Rolling out to all of Austin soon, getting the next level up maybe of FSD soon, getting the opening up to all comers in Austin soon. All these things maybe within the month would be probably acceptable to everybody. Then within a couple of months, we need to move to a second city. Maybe 3 months, we need to move to a second city. That is supposed to be San Francisco. There's definitely some of these vehicles up in San Francisco right now, plotting and doing what they do best. We'll see if that's what the statement is. The next city is supposed to be Los Angeles and or San Diego. How much of that territory, we don't know, but that is supposed to be the third city. Will all of that change? Maybe it's going to be Arizona. Maybe it's going to be Florida. This is what we're going to want to hear. Is there changes in what we have been told in the past? And I can assure you specifically what has been said is San Francisco next and then Los Angeles. Now, other people think they've heard other things. That is what we were told in the various by Elon Musk specifically. All right. So then what happens after that? Are we still looking at 1 million units at the end of next year? Are we still looking at people who own vehicles being able to do the Airbnb thing by the end of next year? These are all related basically to the guidance on Robotaxi. Number two, everybody's very, very interested in the Model Q timing and whether or not it's a different form factor. So I don't think we're going to see pictures. I don't think we're going to get maybe we'll get a specific announcement of a date. Maybe we're going to have a reveal October 1st or something like that. But the Model Q timing is on everybody's mind right now. And if you listened last night, you know that Nicholas Gibbs says, no, it wasn't Nicholas. Who was it that said that was it Nicholas? So I guess it was Nicholas Gibbs last night said he thinks it will be way more than 250,000 units of the Model Q next year, which is a big number, way bigger number than I had in mind for next year on Model Q. So number three will be unit vehicle sales for this year. Last year in the second quarter call, Elon gave us the rest of the year information, gave us a number, not a number, but a rough estimate. Will we get a rough estimate? That is on people's minds right now. Number four would be timing of the release of unsupervised. The last thing we heard from Elon was that that would be before it would be in the fourth quarter. Is that still going to happen? Are we going to get unsupervised? A lot of people would like to know what's going to happen with insurance and things of that nature. I don't think we're going to hear that today. Number 5 would be Optimus numbers confirmation. So these are the 5 confirmations. And Optimus, as we understood it, was going to be 1 legion this year and 10 legions next year. That's 5,000 Optimi built this year, working in the factories, and 50,000 next year, many of those being sold to third parties. Do we get a confirmation of those 2 numbers? That's all that would be necessary to keep people excited about Optimus, a confirmation a quarter later that that's still the numbers. All right, this is from Tip Ranks this morning. Tesla stock is under the microscope as the EV giant gets set to report second quarter earnings tomorrow after the market closes, actually 2:30 California time, 5:30 Eastern. Beyond the headline numbers, investors will be watching close. I'm sorry, that is not true. The earnings numbers will come out, probably about 20 minutes past 1. Roughly, that's when they come out, California time, or 20 minutes past 4. I was talking about the earnings call. Beyond the headline numbers, investors will be watching closely for updates on Tesla's innovation efforts, including Optimus, expanding robotics ambitions, and potential investment in xAI. I didn't put that in the list because as much as that's interesting, I'm not sure it's a market mover, and I'm not sure they'll give us any details. Maybe he will say, because he'll be asked, is Tesla going to get to invest in xAI, and will this be on the agenda on November 6th at the stockholders meeting? Despite ongoing concerns about weak sales, the loss of EV tax credits, and CEO Elon Musk's polarizing reputation, some analysts see a potential shift in the narrative. This is including Dan Ives, who believes the setup going into this report is dramatically different from the more cautious backdrop ahead of quarter 1. All right, so I think it was 6 quarters ago, Elon Musk says, we are no longer an AI company. We're no longer a car company. We are an AI company concentrating on robotics. This is the new vision for Tesla, is an AI company going to bring basically foundational wealth, wealth to the world, okay, based on robotaxis and Optimus. That is actually the ambition. Now, at the April earnings call, the big focus was Musk officially leaving the Trump administration and pressure to refocus on being CEO of Tesla. Now investors are seeing more of the wartime CEO in Elon. He's laser focused on the robotaxi expansion in Austin, with more cities seen on the docket. This is all according to Dan Ives. Calling Tesla one of the clear future leaders in AI, Ives pointed to the company's growing momentum in autonomous tech and robotics as key catalysts. And you got to remember that this is Jensen Huang, who owns the first $4 trillion company, or is the CEO of the first $4 trillion company ever, continuously says it is the embodied AI is where the money is going to be, and that's where Tesla is. The analyst believes that the market is starting to grasp the scale of what Tesla is building, not just a car company, but an AI-driven platform with massive long-term potential. In his view, that opportunity alone could add $1 trillion in value to the Tesla story, but he means this year. Okay, so we're at $1 trillion valuation right now, almost exactly. And so that would be doubling from 335 to 670 or 700 if you want to add another trillion. I, of course, am at 1,000 for the end of the year, which would be 3 trillion. Of course, innovation alone won't carry the story. Tesla also needs to stabilize the core markets, particularly in China, where sales have stumbled amid fierce competition. Encouragingly, June marked the first monthly sales increase in 8 months, driven by strong demand for the refreshed Model Y. For Ives, this rebound is a key signal that Tesla's execution in its most important growth region is improving. So China's doing well. United States, not so much, and Europe, terrible. As for the raw results, the street is expecting revenues of $22 billion, with automotive revenue exceeding $16 billion of that total. Gross margins, excluding credits, are seen landing between 13 and 14%, with EPS, the final number at 0.39, 39 cents. And we saw that various people are anywhere from about 25 all the way up to about under 50, and nothing outside of that range. Still, the loss of the EV tax credit remains a looming challenge. Ives cautions that this cash cow will play a smaller role in Tesla's free cash flow by 2026, though he expects management to address the issue on the call this time up. Importantly, we anticipate deliveries globally to rebound in the second half, led by some improvement on the key China front with the Model Y refresh, a catalyst. Ives further notice. So we got also the Model Y, not only the refresh, but the Model Y long. Bottom line, Ives remains the most bullish voice on the street, assigning the Tesla shares with a outperform rating and street high $500 price target, which is almost $200 under that other trillion he's talking about, but maybe he means later. Investors could be sitting on a 50% gain if Ives is right. Generally speaking, the rest of the analyst community is far less optimistic. Tesla stock only claims a hold consensus rating based on a mix of 13 buys and holds, 13 buys, 13 holds, and plus 8 sells, so slightly positive. The forecast calls for a 12-month drop of 10%, considering the average price target of $299.52. And as mentioned earlier this week, that number is all over the place. Well, all over the place. I think the low is probably about $399 and the high being more like $313. This is Randy Kirk, by the way, and thank you so much. We've got so many people wanting to read the book. I think we're about 70 right now. The goal is 100. It could be more than 100, but we're probably about 70 right now. If you want to read the book prior to everybody else, you want to get your copy in what they call the galleries, the galleys. If you want to get the galleys version, probably about a month from now, and you get 2 weeks to read it and make your comments. We're not looking for punctuation. We're not looking for spelling. We're looking for facts. Did we get the facts right? Did we get the analysis right? Did we make mistakes of reasoning? And is it readable? Did you understand it? Do you think the average high school graduate would mostly understand the book? That's what we're trying to get out of the readers. That's what we're hoping that you readers will provide for us. We're also asking those readers to buy a copy during the first week of sales and also to review the book within the first 2 weeks. All right, so if you want to do that, you want to get to randykirk77@gmail.com. Just send me a quick note. Again, we're only about 20-something short of that 100. Thanks to everybody that's already done it. Like, subscribe, notify. Yeah, you know what to do. Okay, this is from Mario Knopfel. He says, Trump. Japan is opening its markets to the United States finally. And some people this morning are saying, oh, well, there's, U.S.-owned hotels over in Japan, and there are Starbucks in Japan, and, so Japan is open. Okay, travel to England, where you feel in many cities in England like you might as well be in the United States. It looks just the same based on the stores and the merchandise in the stores, and then go to Japan and tell me that's true. Remember, Japan is for the first time ever opening its markets to the United States, even to cars, SUVs, trucks, and everything else. Even agriculture and rice, which is always a complete no-no, says Trump. The open market Japan may be as big a profit factor as the tariffs themselves, but was only gotten to because of tariff power. They also agreed to pay billions of dollars on military and other equipment, and give us 90% of $550 billion, I guess that's of military, and more. Well, there you go. That helped the market. According to the headlines this morning anyway, the Dow was up because of that news. Market Watch says this morning, in what may be one of the most surprising developments to emerge after President Donald Trump's April 2nd announcement of tariffs on a wide range of countries, foreign investors stuck with their unrelenting appeal of U.S. assets. I think what that sentence is supposed to be saying is that the foreigners are still pouring their money into U.S. equities and other assets. Data released by the Treasury Department last week showed that May brought in a flood of foreign investors into U.S. markets, with their net purchases of long-term securities surging to more than $300 billion. This data counters the earlier notion that the Trump administration's trade policies would dent the attractiveness of American assets. Why would they think that? Why would anybody think that people would stop bringing their money to the United States when the United States is the growth engine of the world by a lot right now? There's no exodus, says Robin Brooks, a senior fellow at Brookings Institute and previously chief economist at the Washington-based Institute of International Finance. In a post on X Tuesday, Brooks wrote that markets really don't think the U.S. exceptionalism story is over. He also provided a chart of net foreign flows into long-term U.S. assets on a 12-month rolling sum basis. While U.S. retail investors have been known to be reflexively buying every dip that comes along, a bit less was understood until now about how foreign investors were behaving. After being net sellers in April, following Trump's Liberation Day tariff announcement, foreign investors flooded back into U.S. markets in May, according to Joseph Kalish, Chief Global Macroeconomic Strategist for Ned Davis Research. I want a long title like that. All right, this is breaking news. Existing home sales decreased by only 2.7% in June, according to the National Association of Realtors' existing home sales report. The report provided real estate ecosystem, including agents and home buyers and sellers. The record high median home price highlights how American homeowners' wealth continues to grow. The average homeowner's wealth has expanded by $140,000 over the past 5 years, according to chief economist Laura Yoon. Multiple years of undersupply are driving the record high home prices. Home construction continues to be lagging the population growth. There's no population growth anymore, though. They should have noted this. I keep talking about this. Nobody's talking about it. The U.S. population is now decreasing. Please understand this. Our fertile females are not making enough babies. That's not true in my family, by the way. I'm going to be a grandfather for the 11th time in about a week. So no, my family's still making babies, but the overall population of the United States is not keeping up, and we are exporting immigrants at this point. We are not net increasing immigrants. This is holding back first-time home buyers from entering the market. More supply is needed to increase the share of first-time home buyers in the coming years, even though some markets appear to have a temporarily oversupply at the moment. High mortgage rates are causing home sales to remain stuck at cyclical lows. This continues to be a problem. If the average market rates were declined to 6%, our scenario analysts suggest an additional 160,000 renters switching over and becoming home buyers. Expanding participation in the housing market will increase the mobility of the workforce and drive economic growth. If mortgage rates decrease in the second half of the year, expect home sales to increase. So right now, we're sitting at 6.67. This is truly an average, very average number, but people are not used to it over the last 20 years. Maybe they'll come down later this year. I certainly hope so. I certainly think by next year, mortgage rates will be coming down, and a lot. So we'll probably be in the fives next year. But people can buy the house now and refinance later. National snapshot in that whole real estate market. No change in sales year over year. So we're right where we were last year in terms of unit sales in the month of June. The median sales price in June, $435,300. For all housing types, that is up 2% from a year ago, which is good. That is a very good number. That should make Chair Powell happy. Average 30-year fixed rate mortgage, 6.75, as I mentioned a minute ago. All right. This morning, the VIX is sitting at 16, a little bit. The POTUS is still at 50%. I don't know why he isn't much higher. It just makes no sense. He's doing everything that anybody wants. He's revealed all of the information about JFK, RFK, now Martin Luther King. We'll be getting the rest of the information shortly, as much as can be revealed about the Jeffrey Epstein thing. We've got the stock market going crazy. We got tariff cash coming in like who knows when. We've got a positive number coming into the Treasury in June for the first time since 2017. I mean, what does he need to do? What does he got to do to get his number over 20%? Trueflation this morning sitting, another thing. Trueflation sitting this morning at 2.02 for the overnights and 2.21, basically unchanged from yesterday. So how is all of that moving markets this morning? Well, let's go ahead and check. So Tesla is sitting at 332.70. That is up 0.18% from yesterday. We got the Dow Jones up 0.49. You got the NASDAQ down 0.02. So you could say that it is even. Tesla, by the way, has been up around 335, is topping off right now, heading down a little bit. S&P rather is sitting flat this morning, up 0.24. Magnificent Seven is completely mixed, exactly as many greens as reds. And we have got the Cathie Woods, though, are all up. Now, last time I looked, the bonds were not going, the bond yields were going up. So that would be the opposite of expectations. Have they moved in the other direction? Let's go find out. It's always fun to see what might have happened when you look at the Cathie Woods. I mean, they're all like this. They're going crazy. So that's usually because the bonds are going right. Do I need to explain that? Or do you guys already understand that? So no, bonds. Nope. They're going up in spite of the fact that bonds are up 4 basis points. So we're looking at 4.376. We have oil, however, on the other side is going down 0.34 cents. I'm sorry, going down 34 cents at 64.96. Now, interesting, the energy secretary last night, I watched him in his talk. He was pointing out that if you take away the massive inflation of the past 4 years, which is on the order of 20%, and you took 80% of 64, where would you be? You'd be under 60. So quite frankly, oil right now on an inflation-adjusted basis would be under 60. You've got natural gas down 4.83 more at $3.09. It's been dropping like a rock all week long, and actually starting last week. You've got gold down a little bit this morning, 21.20, back down, but it's still at 3,423. You've got silver all-time high again, 39.72, almost to $40. You got copper almost to $6 at $5.90, all-time high again, up 3.22. You've got the dollar up, and you've got Bitcoin down 13.52 at $118. All right, so what do we got coming later today? Oh, I don't know. Nothing happening today. I'm not sure what I'm going to do. Usually I try to do a little show between the numbers coming out and then the earnings call. That show usually gets 5 views. So I'm not sure I'm going to do that today. I'm going to think about it. I'll see what I want to. It kind of depends on what the numbers are. If they kind of are as expected when the numbers come out, I probably won't do that. I'll probably just sit there and listen to one of the analysts give me their thinking about what just happened. But definitely there will be a show probably with Brian Wang at still waiting for Brian to get back to me, but that would be roughly an hour after the end of the call. About an hour after the end of the call will be Brian Wang and I discussing that. Maybe it'll just be me. It's really hard to get talent right after the call because there's a big call from the big guys, the really big influencers out there. All right, so that's what I've got for you right now. Yesterday night, great show with Brian White, but okay, all right. The show that really went crazy last night. We're talking about the most views ever, I think, for Nicholas Gibbs. If you want to go back and check that out, you probably already saw it. I'll put both of those up, Nick Gibbs and Brian White from last night. All right, that's all I got. Oh, you want to just for fun? All right, let's go back. Let's go ahead and check it. Just a quickie here. We've got Tesla up 0.2, still kind of trying to decide, is it going to stay at 333, 332? Is it going to go back up to 335? I think that's what it's going to be doing all day. It's going to be doing that all. That's what I told you. I still believe it. See you right after the call. It's been great talking to you.